Hello everyone, and thank you for joining me in today's webinar. This is the 17th of February 2025. It's the beginning of a new trading week, and this is Mohanad Yaoud, and I'm the Chief Markets Analyst at PU Prime. So today we're going to discuss markets as usual, with a lot going on at the moment. Gold is just, it doesn't stop. It's just going higher and higher, although we have had a brilliant, let's say, profit-taking day on Friday. So do I personally expect this move to continue lower or not? So during the previous week, we have had some conditions on when to buy gold. We have had some support levels. However, it continued just moving higher without actually retracing back to our support levels. So we're going to discuss gold. Of course, we're going to discuss the currencies, specifically the euro and the pound. And of course, we'll discuss, a little bit of everything here and there. So thank you very much for joining me today. Greetings from Berlin. It's Odin here. Good afternoon. Good afternoon. So some people are saying good afternoon. Some people are saying good evening. And oh, we have also a good morning. So yeah, many countries. Thank you so much for joining me today. And let's have a quick look or let's start by having a look on the economic agenda here. It's the 17th of February. Basically today, we don't expect anything in markets. So the US session is off. Today, we won't be having any trading in the New York session. It's for the Washington's birthday. So far, markets basically started the trading with a weak volatility. Let's say we haven't had any crazy moves so far in markets. And I personally expect that the trading day will continue with low to medium volatility. Nothing interesting so far. We only have a speech from Bowman and Harker from the FOMC or FOMC, and other than that, there is nothing pretty much that we should be excited about during today on Wednesday. Moving forward to Tuesday, the 18th of February. Yeah, this is where we will have some good and important UK data, specifically from the labor market. So we have the claimant count change for January. And if you can see, yeah, it's expected to move way higher. So the previous month, which was for December, it was basically 700 only, 700 new claims. However, in January, it's expected to move way higher to 10,000, more than 10x the previous number. So yeah, this is something that should definitely add a lot of volatility in markets in London session, and specifically on the British pound. We also have the unemployment rate for December, which is expected to edge higher a little bit from 4.4% to 4.5%. And that will be it. We also have the ZEW economic sentiment from the Eurozone, expected to be a little bit positive from 18 points to 24.3. Again, it's not a little bit positive, but it's actually a bullish expectation. Let's see if this actually plays out in the markets. We have the core CPI and the CPI data from the Canadian economy. So far, I'm not so excited about the economic agenda for this week. It's only for the labor market data that's to be released from the UK. And that would be it so far for Monday and Tuesday. Moving forward to Wednesday, we do have the RBNZ interest rate decision and the 50 basis points of interest rate reduction is expected. So currently, the interest rates on the New Zealand dollar is 4.25%. This is expected to move lower with a 50 basis points or half a percentage point to a 3.75. And of course, markets will be following up with the rate statement. Of course, to try, to figure out the future guidance from the Reserve Bank of New Zealand and the monetary policy statement as well. We also have the CPI from the British economy for the month of January. And it's not so good because it's still expected to move higher. So for the CPI expectations are to move higher from 2.5 to 2.8%. This is not really good. This is not good because the British economy at the moment is not doing so well. And if inflation is again moving higher, that would be, a terrible position to be at for the Bank of England, because you're still having inflation moving higher while the economic indicators or your economy situation is not really good. So hopefully this doesn't, move higher to 2.8%, or this would be really, really bad for the British pound. What else do we have? We have some housing markets data from the US economy, which is the building permits and the new housing starts for the month of January. Basically, we will be having the FOMC meetings on Wednesday, okay? The meeting minutes. And it is important, to be honest, when it comes to focusing on what actually happened during the past meeting. It was just, interest rates were kept at the same level. Okay, that's good. But what were the discussions? Because at the moment, markets are not seeing any interest rate cuts in March or even in May of this year. So let's say the probabilities are 50%, 50% for an interest rate cut in June, but most probably markets don't really see any interest rate reduction from the FOMC basically in May or even in March, or March and even in May. So will this be changed by the meeting minutes and the discussions that they actually had during the past, meeting? Let's wait and see. This will be released on Wednesday. And to be honest, so far this is the top, event I'll be looking at during this week. Okay. Moving forward to Thursday, it's the initial jobless claims and the continuing jobless claims. Not a big difference, expected in the initial jobless claims and even the previous one. Remember when I said to you that, okay, markets will be focusing more right now with the unemployment claims. Yeah, but we didn't have any jump in the numbers. So it was just 213,000 new jobs or new claims for initial, unemployment. And this week it's expected to slightly move higher to 214,000. Nothing crazy so far. So yeah, we will still monitor this, however only for major or big changes. But 1,000 plus or minus, give or take, it's not really a big deal. And moving forward, we also have the crude oil inventories and the Cushing crude oil inventories as well. And I think we end the week on Friday with the retail sales from the British economy. Yeah, you can see it right now. This is the retail sales and the core retail sales. And as well, we also have the PMI numbers from the British economy. So it's the services, the manufacturing, and the composite. So let's say apart from the FOMC meeting minutes, which will be released on Wednesday, most of the week's volatility will be on the British pound. We have the labor market data, we have the retail sales, we have the PMI. So a lot to be focusing on when it comes to trading the British pound. So it's basically a little bit, let's say, light economic agenda. We don't have that crazy moves expected. Let's wait and see how markets will react to this. And let's start by having a look on the technical analysis, right? So this is the daily time frame on the dollar index. And you can instantly see this is a medium term high around here. What about the talks between Russia and America about Ukraine war? As far as I'm concerned, so far it's still talks. And as far as I'm concerned, Donald Trump is, yeah, unless he actually does something or says something that has been concerned, it's just talks. So of course, if this is announced, markets will have a huge impact, but specifically on gold, because gold is really trading at elevated levels at the moment. So I think if this is materialized in the markets and we actually reach some sort of a truce or ceasefire or anything between Russia and Ukraine, I would personally expect gold to move heavily lower. But until then, we cannot basically discuss it's something, whether it will happen or it won't happen. Donald Trump says here and there. However, is actually something going to take place or not? I don't really know. So the dollar is basically bearish, as you can see. During the previous week, we actually tried to break below this key level. You see this one, it's a rally base rally. So this is a demand zone. However, I wouldn't personally stick to it so much because on Friday, you can see that we already tried to move lower. So even by a wick, okay, because the demand or supply zone should not even be broken above or through by a wick, okay? And if this happened, I wouldn't basically trade on this demand zone anymore. Yeah, maybe we can see a slight upward move on the dollar, but basically during the week, I'm bearish to move lower and to target the levels of 106. This is the current demand zone I'll be looking at. This one here. So yeah, it's just, a slight reversal here into, some sort of a top here being formed on the dollar index. What's happening either on the euro versus the dollar, it's somehow the same. But again, on the opposite side, where are my tools? Yeah, here we go. Some sort of, trying to form a bottom here. And currently the euro is stuck around a very important level of resistance. I wouldn't say supply because it was once supply and it got filled around here. So it was fresh supply here, this powerful move lower. However, we went higher and we filled all of the orders here. So it's no longer a supply zone. However, I would say it's still a resistance. From here, I would expect a slight move lower. However, again, a move higher to 1.06 is something I would personally love to see on the euro during this week. So, yeah. Monday, the previous week was just a great week, right? When we check on the weekly candle or the weekly time frame, you can see the previous week we actually earned around 1.58% on the euro. So I would personally expect this move to continue higher. However, nothing wrong with just, retracing a little bit to form the lower wick on a weekly candle and then moving higher. So maybe somewhere around here, which is 1.04, let's say, is where I'll be looking to buy the euro. So a move lower, 1.04, then a move higher to 1.06 is what I personally expect to see on the euro this week. When it comes to the pound, as I said, the pound should expect or should see or witness a lot of volatility during this week, a lot of data. However, yeah, it's slightly moving higher. And when I say slightly is because, yeah, the retracements are in the same price territory. So it's not really a strong trend. It's not even a trend. It's a retracement, right? Of the previous downward trend. This is just a retracement, which is totally fine. However, there is a key supply level here that we have around the 1.26 or let's say 1.27, right? Which will be a previous supply zone and the upper limit of the price channel that we are currently trading in. So again, just like the euro, or not like the euro, it's slightly opposite, but I do expect a move higher to the 1.27. We can basically move lower first to retrace and retest those levels, and then move higher. If this happened, it will be exactly the same move that I personally expect on the euro. So a euro to move lower to 1.04 and then move higher to 1.06. The pound could move lower to retest those broken highs and then move higher to 1.27. This is what I personally believe. What a great bearish engulfing candlestick that we had on gold back on Friday. We lost around 1.5% in one day. That was huge profit taking here. However, if you can see, okay, since December, 19th December, okay, any bearish candle that you will see here, maybe like this one, this starts a retracement to the previous demand zone. So we had some sort of demand zone here, a retracement to form another demand and move higher, for another retracement with a demand zone to retest and then move higher, for another retest and move higher, for another retest and then move higher. You can see how much this pattern actually repeats itself. Even this one, you see this retest, that was basically a tiny resistance here. You see this wick? So it's always that, okay, we are in an upward trend, we reach new highs. After reaching new highs, we retest those highs, then move again, and so on and so forth. So I'm still basically bullish gold, even with this huge candlestick, unless or if, you know, the truce happened between Russia and Ukraine and so on. Of course, this will be you know, negated the bullish scenario, and I'll be expecting a huge drop. But on the current circumstances, is that, okay, this is a huge upward trend. We reached even a new high around the 2940. Retracement, totally fine. Where's the previous demand zone? Here you got it, right? That's the demand zone tested once. I think during the week we might move lower to the 2865 or 2870, and I'll be personally buying again on gold, at least to target the previous high and then move higher to the $3,000. This is what I personally expect. When it comes to US crude oil on the daily time frame, you can see this is a textbook definition of a V reversal. Okay, so we were actually moving higher, way higher, with very powerful momentum. However, again, V reversal back to where we started. This whole upward move started exactly here, because before this it was just sideways, right? And then the powerful move started here. So this is the demand zone I want you to focus on, which is the level of 70, roughly $70, or let's say $70.50 per barrel. So after a huge downward move, okay, now the V reversal is fully formed, and you can see, yeah, momentum is now showing that, okay, although we are having here a lower low, but still momentum is not able to move any lower. So I'm personally bullish during the week on the US oil from those levels. The best thing to do during the week is to wait for one of two things, either higher high. So when this high gets, you know, broken above something maybe like this, I will buy. Or if you're someone who works with trend line, and basically I don't, but yeah, maybe do something like this. Wait, sorry. But this will be so far away. Maybe some people will do this, some people will do this. Last two highs. So whenever we break below this upward trend, downward trend line to higher, you'll be expecting a continuation. Anyway, whatever your entry strategy is, I'm basically bullish this US crude oil during the week. And one of the key things to watch during the week would be the Dow Jones, because you can see the Dow Jones here. Remember this downward move of around 6% that was in December, right? When we said, okay, rally didn't come and we didn't see the center rally and so on. That was a great move lower on the Dow Jones, 6% roughly. So that was a supply zone. When we touched the supply zone here, basically the move lower wasn't as it should have been, you know. It was a tiny move lower, and since then we are not able actually to move lower, although this is supposed to be a supply. So in this case, when we have a sideways range below a key supply level, which is an all-time high, this makes me believe that, okay, basically we are creating support to move higher. So during this week, once we break above the $45,000, 45,000 points on the Dow Jones, I'll basically think of heavily buying the Dow Jones on the medium term for all-time highs to take place. So yeah, this is a quick overview of what markets should see this week. Remember when we said about, you know, Bitcoin, that we expect nothing because we are trading just near the equilibrium level. Those who remember this from the previous webinar, you know, will be happy about this, because we didn't trade on Bitcoin. I said to you, it's a sideways range, and inside the sideways range, the middle range is exactly the sideways or the equilibrium. So you can just see a lot of volatility around those. And yeah, as you can see, the daily time frame, all of the previous maybe 10 days, we have seen nothing on Bitcoin. Why? Because it's trading near the equilibrium. What I will personally wait for is wait for it to move lower to the support. And if we have seen some, you know, bullish price action from here, and then we will expect to move higher. So yeah, do we have any questions? Please let me know before I end the session here. None. Thanks for your insights. Newbie question, sir. Sure, go ahead. About the gold all-time high. Just try the question on one time. Very informative and interesting, thank you. When do you usually know if the all-time high will reverse? Momentum. It's all about momentum, sir. And yeah, as you can see here, although it's moving higher, but momentum is not so great. So in this case, I personally expect that we should have a downward move first, or a move lower, before continuing the move higher. But anyway, because we don't have previous history, it's always advisable, you know, to trade in the direction of the trend. This is just the safe side. Okay. Thank you guys for attending this webinar. I'll see you guys next week on Monday. That will be the 24th of February. You have a great trading week. Please stay safe and please use your stop loss. Have a great day. Thank you.